Now, back by popular demand, it's the Lance Roberts Show.
And good morning. It's 6:07 on your drive in this morning. It's Monday as we head into spring break week already coming up.
That soon?
I know. It's right around the corner. My daughter asked me this weekend. She's like, hey, Dad, do you want to do something this weekend? I'm like, why? What's going on? She goes, spring break. And I was like, are you serious? Ready?
Really?
Yeah, it's here. So over the next... spring break falls in the middle of March.
Yeah.
Just the one thing, though, I think about this. If you go to other countries like India, right? You want to be a doctor in India?
Yeah.
4.5 years.
Non-stop.
Yeah. In the U.S., we're the only place in the country that's like, oh, I've been in school for like 3 months. I need a break. I know school is so difficult. And now... It's like now my son, he's my older, he's senior in high school.
Yeah. He
goes to school till 11 in the morning. He gets up in the morning, he has 2 classes, and he's done. And I'm like, what's going on? It's like when I was a senior, I was going all day long. And, he goes.
And it started at like 7 in the morning.
Yeah, no, I know. Well, now they stagger the openings.
Yeah.
So they can reduce the number of buses they have to own.
I get it.
So now they stagger the pickups. So. I don't know. It's just I'm not sure. This is why it takes 20 years to be a doctor in the U.S. I'm being facetious, of course, but
it does not prepare the kids for reality.
My brain's so tired.
Yeah.
I need a break.
Poor baby.
I need a spring break next week. We're not going to do the show.
Put it all on Memorex.
So you had a good weekend?
I had a very restful weekend.
You did?
Yeah. I lived in a bottle of Ambien all weekend.
So you didn't. So during the show today, ladies and gentlemen, if we have a break of Tourette's, it will be Brent's Ambien kicking in as he pulls a Roseanne Barr on live radio.
That's assuming I can find the button.
Exactly. So yeah, anything goes wrong today, it's all Brent's fault. All right, look, we got a few things to get into today on this Monday, of course, as we're getting things going. Interestingly enough, market futures are up a little bit this morning, which is good. That's a good thing. On the back of more news that, we're getting closer and closer to a trade deal. Over the weekend, Donald Trump tweeted out that he's very close to a trade deal. This kind of goes along with the statements that were made over the last couple of weeks that we were getting closer to a trade deal. And that, eventually we'll be able to lift the sanctions, most, if not all, of the sanctions that were put into place about this time last year when we started this whole trade war. Now, here's the interesting thing about this. Markets have been rallying now for the last 8-9 weeks on the hopes that, two things. One, that we would resolve the trade war. And remember, this first headlines kind of started hitting in December that we're going to have this meeting, we're going to get resolved through this. And this is what we talked about here on the show, is that Donald Trump has come to realize that trade wars, as we said a year ago when we started this, that trade wars aren't good for either the economy or the markets. And, of course, after a very tumultuous last year, slowing of economic growth, tough stock market year, Donald Trump has now understood that trade wars are not a good thing for the country. And so we're now trying to, and I said back then, I said, look, he's going to wind up getting out of the trade deal any way he can to save some face. And this is what's ultimately going to be the case, is that we're going to have some minor concessions on both sides of the fence, just so that both China and the U.S. can save face and say, hey, we resolved the trade deal. It's a win. It's good. And we get rid of these tariffs. That's a good thing for the economy because, again, tariffs are a tax, and that's all they are at the end of the day. So not surprising we're seeing some positive input into the markets from a reduction of the burden of tariffs on companies. Remember, 40%, now it's almost 50% of corporate profits come from overseas trade. So implying or imputing a tax on corporations from tariffs, lower corporate profitability. Okay, so not surprisingly, we're getting some market push here. Now the question becomes, what does this look like at the end of the day, right? So we're going to repeal these tariffs, reduce that burden, but were the tariffs and the trade war successful, right? And remember, this whole thing started, and this is all kind of lost in the mix, and this is like when you have an argument with somebody and you start out on the argument with a premise, and then somewhere along the way you've completely forgotten what the premise was, and so however you resolve the argument, somebody says, well, I won that argument, but you don't even remember why you started the argument in the first place. And this is the case. Remember, this whole thing started because of the trade deficit with the U.S. At that point, we had a record trade deficit with the U.S. Donald Trump comes out and talks about the fact that it's unfair. We have an unlevel playing field, and we're going to level the playing field because we have this record trade deficit with the United States. With China, which is a burden on the United States. So here we are, wrapping up the trade negotiations, trying to get rid of these tariffs now, and we are running a record trade deficit as of last Friday. So for all of the agony that was sent through the financial markets and through the economy last year, we haven't resolved anything. We're still running a record trade deficit. And as we said back then, a record trade deficit really isn't that bad of a thing. The trade deficit isn't a horrible thing. All it says is that we import more than we export. And that's not surprising because, as we've talked about before, we export inflation to import deflation. So in order to import deflation, we're going to have a trade deficit. And this was the part that was lost during this whole argument, because we can't deal with higher prices. Even small rises in rates and prices have caused a fairly significant slowdown in the U.S. House prices are falling, auto sales are falling. We're seeing the impact of these of weaker economic growth rise, even with just a small rise in interest rates. Consumers simply don't have the ability to afford higher prices. They can't afford to pay more. So we need that deficit to keep prices low. Be right back.
Want a longer talk with Lance about your money? Request a personal one-on-one at LanceRobertsShow.com.